Have you heard real estate investors talking about buying real estate with no money down, using what is referred to as creative financing? Well, if you want to learn more about that, then watch this video because I'm going to be interviewing Gabriel Hamel. He is an expert in the field and he's going to tell you how he built a portfolio of nearly 400 properties by using this one technique. All right, let's get started. All right, Gabriel, thanks for joining. So, to start off, for people who haven't heard of you yet, who are you? And basically, what are you doing in real estate?
Yeah, I mean, I'm just a guy who thought that real estate investing made more sense than the typical W-2. I got my background. It started a lot of motivation. I read the book Rich Dad Poor Dad back in like 2002. But a few years prior to that, I had joined the military while in high school. So kind of going back even farther, I joined the military at 17. I joined the Army National Guard at 17. I was not what you'd call a studious kid. I stayed in school really for high school wrestling and the social aspect. But I had a buddy that said, "Hey, Army National Guard, infantry unit, 1 week in a month. You go play in the woods." And I thought, all right, this makes sense. A couple years later, I read the book Rich Dad Poor Dad. I'm living in my friend's attic at the time for $100 a month. And I read Rich Dad Poor Dad, and I'm like, this makes sense. This is not the stuff they teach in school. I'm going to build this financial freedom, this financial future of mine through buying cash flow real estate. And then shortly after that, I got a phone call and I was deployed to Iraq in 2003 and 4. So, on that deployment, I, had all this motivation and very little information, but I knew that real estate investing would be my path. So I had all this excitement and really on that deployment, my goals were to come back alive, not too messed up, and come back and start buying real estate. That was really kind of the beginning of kind of where the motivation came from.
So you didn't come back with a whole bunch of dinar and think you're going to turn that into USD and that would be the way.
I did buy some dinar. I think it's worth. I looked the other day because I was telling my kids this story, and
Yep.
I looked up the value for the first time in years. It's worth about the same as I got it for 20 something years ago. So yeah, I do have some dinar, but that is not where I've built my wealth. So I came back from the deployment in 2004 and got completely out of the military in 2005. And in 2005 is when I bought my first property. And so, back in 2005, anyone could qualify for a home. And I had no money, I had no job, I had no income, but I wanted to buy a property. And I had a lender that approved me. It was 100% financing. Back then, it was an 80-20 loan. So 80% lending from one bank, 20 from the other. And I bought my first single family house in '05 and rented out 2 of the bedrooms and lived for less than I could anywhere else. Now they call it house hacking. Back then, it made good financial sense. So I did that in 2005, 2006, and 2007. And honestly, I remember thinking back then, I'm like, this is easier than what the books say. I'm like, I'm just gonna go to the bank every year and buy another property. Um, Also in 2006, I opened up a small nutrition store. Never really made a lot of money. Sometimes we're talking hundreds of dollars a month, and so that really wasn't enough to support myself, my wife, and eventually my children. So in 2008, I shut my store down. I had no degree or no high paying job that I could fall back on, and so 2008 was really kind of my oh shit moment of like, hey, what do I do? Like, how do I have this dream of owning real estate and being financially free? I have these 3 houses. 2 of them cash flow a few $100s a month, but that's not really enough to live on. And I started taking all these odd and end jobs. I mean, I was qualified for nothing. I mean, even the military, I was infantry, so there wasn't a lot of job options. And so I was literally like Craigslist help wanted ads. I was mowing lawns. I was literally like riding my bike to do landscaping. I was doing everything I could to get by, and I eventually landed a 30-hour-a-week minimum wage job in a high school special education class. And it was about 3 months into that job that I'm like, this is not what I want to do forever. And my heart goes out to these kids, but this was not my dream. 30 hours a week, barely getting by, barely a minimum wage. And so in 2008, I went back to the bank and said, hey, I want to buy another house. And they said, you don't qualify. And I remember I said, well, what do you mean? I asked them directly, what do you mean I don't qualify? I've purchased a home every year the last 3 years. I've never missed a mortgage payment. And they said, yeah, guidelines have changed a lot. You actually have to have income, a down payment, a real job, and I'm doing the math thinking like to save for a down payment, like I'm going to need 3 or 4 jobs, and there must be another way. And I remember reading about seller financing, private money, hard money, and at the time I knew nobody with money. I knew no one in business. I knew no one in real estate. And I just kind of fell on, hey, seller financing will be my path to financial freedom. And I made a goal that year in 2008 that, hey, if I could replace this 30-hour week minimum wage job by buying cash flow real estate, seller financing, then I would at least be financially free. I could quit that job and really focus on just taking down more deals. And so I spent a year looking every night, after work, the kids were in bed, I would just get online and start looking at off-market deals, mostly on Craigslist. And I talked to hundreds of people and analyzed hundreds of deals. And I eventually, about a year later in 2009, bought 4 units, no money down, seller finance. It cash flowed almost to the dollar that I was making at that low paying job. And I stopped working. And now I spent, I was financially free, but I was poor. My expenses were low, but my income exceeded my expenses. And I spent the rest of 2009 through 13 buying all no money down seller finance deals. And my only criteria back then was these properties had to be cash flow positive.
Yeah. You see, that's the thing is, people that are watching this right now, if they didn't go through 2008 and with the mortgage crash, they don't have any idea what you're talking about. Where you used to be able to walk into a bank and you would try to get a loan and they would say, well, in order to meet this loan, you have to have X amount of income and maybe $100,000 a year. And they would ask you, how much do you make? You'd say, I make $100,000 a year. And then boom, you'd walk out with a loan. And it didn't even matter what you were making. And so it was kind of, I'm going to call it the Wild West. It was so easy back then. And that's what you were saying you were doing. And I'm not saying you were misrepresenting your income, but you could walk into banks and they were just throwing money at you. But then we had the mortgage crisis of 2008 and everything came to a screeching halt and the banks tightened up their lending standards. And one of the major issues or impediments that I find for people who are just getting started in real estate investing is they think that the only way to buy real estate is to go out and get a traditional loan because their parents did that. They've talked to other real estate investors who are using traditional financing to purchase real estate. But there's this other side that's out there, and it's called creative financing. And the thing about it, and I'd like you to speak to this, is that investors will tell me sometimes that they think it's kind of sketchy or illegal to engage in creative financing, that somehow that word has taken on, for some people, a negative connotation. Have you run into that? And then if you could address that.
Yeah, I mean, I have run into people that, seller financing or creative financing, this negative connotation. But what I've seen more often is people say, oh, it's just not a thing people do anymore. Even when I was buying in 2009 through 13, which is when I built up my initial portfolio, I had agents, brokers, other investors, people in my circle that at the time, looking back, I realized they had maybe never bought a real investment property in their life, right? So be careful who you take your advice from. But I had all these people that, as I started building relationships and kind of growing my network, that said, oh, sellers don't do that anymore. I had sellers laugh at me. I had agents and brokers laugh. But I was committed to, finding seller finance deals. And it was really out of necessity. I mean, at the time I had no money and I just had a big dream. And I thought, like, this is how I'm going to get into real estate. And what I found is I wasn't talking sellers into carried financing. That year of talking to potential sellers, mostly off market, these were mom and pop owners, mom and pop investors, great people that were just tired landlords. Oftentimes they had owned the real estate 25, 30 years. They were, self-managing. They were tired landlords. They were doing maintenance, repairs, property management. They were dealing with the tenants. Oftentimes they had the property paid off, so they didn't have the advantage of, they weren't able to write off the interest anymore. They've already depreciated the property, and they were good people but tired landlords. And it created a scenario where these sellers wanted to carry financing. So instead of me going and trying to convince or talk sellers into carried financing, I found sellers that already understood the advantage of carried financing, and it was almost like an annuity for them. They wanted true mailbox money. And so I was able to walk into these properties that were poorly managed, under rented, had some deferred maintenance, and the seller became the bank. They got true passive mailbox money. So it was a win for them and it was a win for me. A lot of times these properties, the upside value was that they had just been poorly managed and under rented for so many years. And these sellers wanted to carry financing. I mean, I would say I've never done a deal with a seller who didn't already want to carry financing and understand some of the advantage of it and just wanted more passivity to their investment because they were at a time in their life. It was mostly men and women 60s, 70s that did self-manage and were just ready to not actively invest like they had, 25, 30 years prior.
Well, are you just then focused on seller financing, or have you been doing any subject tos, novations, subject to lease options, those types of things? Or is it just that is the niche that you found is the best?
Yeah, I mean, initially it was, a lot, almost all properties that were free and clear. And so,
Mhm.
we would do a note and trust deed and we would negotiate, terms that made sense for me as the buyer and for the seller. And I think, where a lot of people get hung up, and I've done some subject to stuff but the majority of the stuff I've purchased with seller financing has been true free and clear properties. It's a note and trust deed. And I think where a lot of people get hung up, they think they have to convince or talk a seller into carrying financing, or they have to come up with like what the perfect terms would be. I mean, the question that I get asked probably more than anything, the two questions is how do I talk a seller into carrying financing, which I already addressed. I never have. I've just found sellers that wanted to carry financing. And then the other big question is what kind of terms are typical? And there are no typical terms. I mean, I find that sellers are usually stuck on price, down payment, interest rate, or some other emotional aspect of the deal. And I kind of found this by accident. I mean, I just didn't know what I didn't know. And so as I was talking to different sellers, and I would just ask the basic question of, hey, what kind of terms would you be interested in? Just by asking that basic question of, hey, what kind of terms would you be interested in? The seller usually told me, was down payment important? Was it interest rate? Was it the price? Was it some other emotional aspect of the deal? And then I would always go home and go, okay, can I give them the thing that's most important to them and still make the deal work for me? So if they're stuck on price, for whatever reason, they're stuck on this price, can I give them that price, but maybe no down payment or a lower interest rate, give them the thing that's most important to them that they're happy about and still make the deal work for me? And in a lot of cases, that was possible. With other sellers, we were so far off on terms that it was fine walking away from. But I think people get really stuck on like that maybe there's some magical terms. I've done deals where it's, interest only or direct principal. I've done deals where it's a 30-year fully amortized with no balloon. And so it really is as creative as you as the buyer and the seller are willing to get and what works for both parties.
Okay, so, a lot of times when I'm teaching events and this topic comes up with the students that are attending these events and we start discussing this, they seem to think that these are unicorn deals, that there's not a lot of individuals out there. And I've heard people say, I can't find any seller financing deals. How would you address that person that's a skeptic that will tell you these don't exist in my market?
Yeah, and I think that's common. People do think it's like this unicorn, but the reality is like people financed properties like this for years. Like I think before there was ever a 30-year fixed mortgage and before bank lending, like this is how people transacted. I had people telling me the same thing in 2009, and I think oftentimes it's a numbers game. I mean, I've had people tell me that even in this last year, going, "Hey, there are no seller finance deals. No one wants to carry financing." And I say, "How many sellers have you talked to?" They're like 3, 4, 5. I probably had 200 conversations from 2008 to 9. I had about 200 conversations before I was able to put together a seller finance deal that penciled. Now, of those 200 conversations, there were a handful that were willing and wanting to carry financing, and a lot of them wanted to carry financing on terms that didn't financially make sense. The property wouldn't have cash flowed. It wouldn't have made sense for me as a buyer. But those 200 conversations where I was looking at deals, I was building relationships, I was analyzing deals, and most people that I come across that say, hey, these are not available, they're just asking an agent like, hey, will the seller carry financing? And then the agent says, no. And they're like, okay, and I'm done. And oftentimes they've only asked like 3, 4, maybe 5 sellers, and they just think, hey, seller financing just isn't an option. I think it's a little bit of a numbers game. And then also getting to know, what the seller's needs are. And a great example I have is I bought years ago, probably 10 years ago now, I bought this commercial property and there were 7 multifamily properties attached with the sale. And it was being marketed as a development project. And the land itself, long-term, does have some great potential for development. But when it never sold and the listing expired, and I walked around with the previous owner, with the seller, for like 15 minutes. And I said, hey, I know some people that offered on this. I see it didn't sell. I'm just curious, why not? And he said, well, he goes, I'm 75 years old. I'm a retired judge. He said, I don't want to be cashed out. I just want I want income. He goes, I want income for the next 15 years. And if I were to pass away during that time, there's this nonprofit that's really important to me. And I don't really have any family to pass it down to. But if I pass away during that 15-year period, I want to make sure this nonprofit's taken care of and they would get the payments. So here's a guy who wants to carry financing. His own broker marketed this as a development project and solicited cash offers. So his own broker didn't even ask him what he wanted. He kept rejecting these strong cash offers because he didn't want cash. He was 75. He didn't want to actively invest. He didn't want a big lump sum of cash to go stick in the stock market. He didn't want to actively, go invest in deals. So here's a guy, prior to that deal, I would have said, sellers are stuck on price, down payment, and interest rate. He was actually flexible on price, down payment, and interest rate, but had this emotional attachment that, hey, if he passed away during this 15-year term, that this nonprofit that was important to him would be taken care of. So walking with this guy 15 minutes and finding out what his needs are and what's most important to him, we were able to put a great deal together. He carried financing for me for 15 years. I still own the properties today. They're worth more than double what I paid for them, because what was important to him was that he had income for the next 15 years. And if he were to pass away, this nonprofit would be taken care of. And there wasn't a buyer out there, including his own broker, that listened or asked him what he needed and what was most important to him. And spending 15 minutes with him, I found what was most important to him and was able to give him that. And then he gave me incredible terms on price, down payment, and interest rate.
Now, see, what you're saying is, I hope people are picking up on this. So I'm going to break this down and interject if you think I'm off base here. Number one, you're doing seller financing. The person you're approaching is not the homeowner themselves, it's their personal residence, because they're not going to be interested in that. The person that I have approached, and we've done several deals like this, is like what you stated, we approach investors that have, a portfolio they're looking to get out of the market and sell. And those are the people that are going to be open to this, because the homeowner, they're trying to sell their house, maybe go buy another house, so they need that principal cash. Whereas you stated, the 75-year-old individual, they don't need $500,000 right now. In fact, if you gave them $500,000, it becomes more stressful for them in their lives because they don't know what to do with it. Where am I going to put it? I mean, I loan money I work with developers, and every time a property sells, and I get, say, $800,000 or $1 million off that property deal, it becomes stressful for me because I want that money out there. I don't want to be sitting on those funds. I need them invested to bring in cash flow. And this is the mindset I think a lot of people don't understand, and they don't know who to approach. So if you're looking at the avatar, what is your key avatar for a seller finance? If you could just break that down for the viewers to let them know, hey, these are the people you should be approaching.
Yeah, you're absolutely correct. It's never their personal property. I mean, rarely. I mean, I'm sure people have purchased, personal property seller financing. It's usually men and women in their 60s, 70s, even 80s sometimes, that they don't want a lump sum of cash. They don't want to pay a huge capital gain at once. They don't want to put a bunch of money in the stock market, and they don't want to actively invest. So it's usually men and women, 60s, 70s, sometimes 80s. Oftentimes they own the properties free and clear. Amazing people. They're investors themselves. So these are investment properties, and they want passivity. They want income without the headache of having to manage the property. And so they become the bank. They just get to be on the other side of the transaction on an asset that they've typically held for a long period of time. And, like some of these sellers, they don't, you pay them off. A lot of people think, like non-investors think, okay, you sell a property for $1 million. Well, great. But these investors are thinking, well, if I have $1 million, just like you said, well, it's a problem. I either have to 1031 into another deal. And a lot of these, older investors don't want to keep actively investing, or they have to pay a huge capital gain at once, and they don't want to do that either. And so that really is the avatar, the mom and pop investor. And I wouldn't even say mom and pop. Sometimes, like as I've shifted towards more commercial properties, there's a lot of reasons why a seller would want to carry financing. And sometimes it's the same reason. They just don't want that big capital gains all at once. And, for them, it's easier to earn interest on their money than go have to place it somewhere else.
Yeah, and so when I would tell the viewers as well, one place to go, because it's always, well, where do you find these people? What we've done in our business because we flip property in Winston-Salem, North Carolina. We have a lot of investment property there as well. And the way we were able to tap into that market and scale quickly is we aligned with the property managers in that market. And so we started then talking to the property managers who've been in that market for over 20, 30 years and saying, all right, who are the retiring landlords? Okay, because they know their clients. And then we would tell them, hey, if you know that they're looking to get out, then this is how we buy property. Okay, we buy it on terms. Go to them run it by them, or give us the information. If they want to talk to us, we'll talk to them. And we picked up several portfolios that way. And I found that was an easy way to break into a market that we really didn't have any association with, because I'm in Washington State. I mean, the first thing we went to actually was the used appliance store there. So we started going down and saying, who are the landlords in the market? And we got some names from them, so we would call them. Do you have any, when you started your investing journey going down this road, are there any things like that you would look at and say, hey, this is a great place to go to find these landlords?
Yeah, it was interesting. I mean, this is, again, we're going back to, 2000, 2008. But I was on Craigslist. I was, and I say people laugh at Craigslist, but it's like that was where you had owners that self-managed. They didn't want to put a sign in the yard. They didn't want to hire an agent. And then I just kept it really human. I think a lot of newer investors, they think way too much about the transaction. Like the transactional piece to real estate is the easiest part. I kept it really human. I was like building relationships, and I had a genuine interest in these sellers. Like I genuinely was curious. I would meet a man or woman or a couple who, had multiple rental properties, and I was just curious about their story. Like, how did you acquire these? How did you buy these? Oftentimes they had bought with seller financing. So I wasn't there, I wasn't showing up in a suit and tie with a contract saying, hey, sell me your house, take it or leave it, sign this or sign that. I came with a genuine curiosity and started building relationships and just having conversations and asking really basic questions. And I think, sometimes with newer investors, they think that they have to know everything, or they have to, again, talk the sellers into it, or come with this, these are the terms that I'm presenting. I just asked really, really basic questions. And then I shut up and listened. I mentioned before, I would say, hey, what kind of terms would you be interested in? And by saying that, I have a seller talking 30 minutes or an hour just telling me about, this property, that property, this tenant. And I just listened. And even to this day, I have built, I would say every deal I've ever done has come from a conversation or relationship. The transactional piece of real estate, that's the easy part. I think people forget, especially with technology and how easy it is to connect with people online and, auto dialers and all these things. People forget the human element of business and real estate. And I've done my best deals, again, from relationships and conversations. And I just make sure that there's a human element to it. And I genuinely like people, and so I enjoy having those conversations and building those relationships. And some of those, who knows, some of those lead to great friendships or acquaintances. Some people we never talk again. Other relationships lead to great real estate deals. And I'm okay with any and all of that.
You said two things there that really resonated with me, and again, this is something people are watching this. You got to be picking up on this stuff, because these are gems that he just dropped. Number one, Craigslist. My father's an avid real estate investor. If you heard my story, I grew up, helping him build these rentals up. And where does he list his properties? Craigslist, right? For every reason you mentioned, that's why he continues to use that. And the thing about it is, my dad's now 81 years old. If an investor like yourself were to call him up and start a conversation with him, they could probably buy his properties on seller financing, because my mom's been talking, she wants them out of it. She doesn't want to continue to deal with the tenants. I hear this all the time when I'm with them about, they're lamenting about owning the property, that they just want to be done with it. And then the other thing is, what do they do with the cash? And so that's the problem. If they just had income coming in, they're really happy. And one other point about this that I hope people understand is that if you meet that person, say you met my father and he wasn't ready to sell, he knows other real estate investors. They run together. And so he's going to introduce you possibly to his buddy who's the same age that would be willing to sell their portfolio. So that was key. And I hadn't thought about the Craigslist angle before. And so I'm going to keep that one for sure in the back of my mind, because you're spot on. That is where I think the older people tend to gravitate, because that's what they're most comfortable with. You talk about the internet and AI, no way. That's not where you're going to find them.
Yeah, I have another interesting story I'll share. I feel like sometimes, storytelling, it gives some good examples. I had a guy in town who started developing these big properties on campus. So I'm in Eugene, Oregon. He started and I grew up here. So I see these big apartments going up and all over campus, and I am like, who is this guy? Who's building these? And I'm just starting to get involved in real estate, but I'm fascinated by these developments. And as I look into it, it's like the same guy is attached to all these. And so I reached out to him not for any other reason than I wanted to learn his story. I was genuinely interested in who is this local guy that's just developing these, beautiful apartments. So I reach out to him and I'm just curious about his story. And he goes, hey, I was going to law school at the University of Oregon in the 70s, and I started buying these small multifamily properties. And by 2010, it was prime area to develop. There was all these incentives to develop. So he was buying properties while going to law school in the 70s. And by 2010, he was ready to develop. So I was sharing with him my story. I was just by 2010, I just picked up a handful of my first few seller finance multifamily deals. We stayed in touch. It's not like we became best friends, but we kept in touch. We'd go to lunch every once in a while. And he's probably 20 something years older than me. Well, a couple years later, so this is like 10 years after we met, right? So I met with him with no intention other than to like hear his story. Fascinating story. This guy now owns thousands of units all over the country, mostly in the Northwest. 10 years later, he calls me up and says, hey, a buddy's selling a single family home the town over. Are you interested? And I said, I'm not buying single family anymore. I had just bought my first mobile home park. I'm really focused on mobile home parks. And he goes, that's interesting. I own 5 and there's one I'm thinking about selling. And I said, hey, are you open to seller financing it? And he said, yes, I am. So he seller financed that property to me 2% down, 60% cash on cash. And I bought that property for, let me think about it. I bought this property for $780,000. It appraised 2 years later for $2.3 million. And so 10 years before I reached out to this guy just because I was interested in the story, and 10 years, I had no other interest, right? And then 10 years later, it led to this phenomenal deal because we had already built this level of know and like and trust, right? He already had enough income, taxable income, so he didn't want a large down payment. He didn't want to be cashed out. We already had this relationship and this level of trust, and so he was willing to carry financing for me at great terms. And even though he was an experienced investor, his expertise was development and not in the mobile home park space. And so I was still able to get a phenomenal deal on this mobile home park with great terms from a conversation relationship that I had built 10 years before, when mobile home parks weren't even on my radar. And I think that's the part that people forget, is like that genuine connection and reach out, because I wanted to hear his story, led to a phenomenal real estate deal that netted me over $1 million 10 years later, just because of genuine interest and relationship, not focusing on the deal itself.
Well, okay, so you keep saying these things, and to you it's just second nature, and you just gloss right over it when you said it. Probably don't know what I'm going to refer to here.
Sure.
You said that you found this developer and you looked him up to see what deals he has. So basically you research to see that he has several pieces of property. Now, this is something I think is important. Again, correct me if I'm wrong here. If you're looking to put one of these deals together, you don't want that owner that has one rental property. That's going to be a harder sell for them because they're used to getting that cash. Maybe they're living on that rental income. But you find those people that have 3, 5, 10, 15 rentals, and you search the property records to see whether or not they have more property in that area. Then you can approach them fully informed, and hey, they got a portfolio. If you're 81 years old and you have 13 properties, that's a headache. That becomes an anchor around your neck. You're probably going to be open to listening to what I have to say. So is that what I gathered from what you just said? Is that kind of the process you've gone through before?
Yeah, I think every seller who's ever carried financing for me has owned multiple investment properties. In fact, the woman that carried financing for me on those first 4 units that replaced that minimum wage job, she sold multiple other properties to me with favorable terms because we did that first deal and we built that know, like, and trust. I was making my mortgage payments to her on time. In fact, that first deal, for the first many years, I used to hand deliver a check. She had a brick and mortar business as well. I would hand deliver a check every month not because I needed to, but because I wanted to have that face time and genuinely build that relationship. Fast forward to 2014, I refinanced a lot of those early properties, and some of those early properties were properties she had sold me. And so at the time, 2014, I refinanced a lot of these properties. She has a big payday, and she called me up and says, "What am I going to do with all this cash?" And I said, "You can lend it back to me." And I had never borrowed private money at the time, and she had never lent private money. And I casually said, "Hey, you can lend it back to me. I'm still investing." A couple months later, I was in contract on a property. I had some other financing lined up. She called and said, "Hey, were you serious about me lending you money?" And I said, "I'm actually in contract on a deal if you want to finance it." Now, we had 6 years of trust, 6 years of me hand delivering a mortgage payment to her. At least most of those 6 years, I was hand delivering that. I bought multiple properties from her seller finance. I refinanced in 2014, so she had a big payday. But most importantly, it didn't end just because the transaction ended. The relationship still remained, and we had all those years of trust. And she became my first private money lender. So I'm in contract on this property. She has all this cash because I refinanced her out of multiple properties, and she had a big payday. And she became my first private money lender. And so I think a lot of people think, again, they focus on the transaction, they do a deal and think, hey, that ends. Well, she had sold me multiple properties. In fact, there were times she was like, "Yeah, I think this is the last property I want to sell." And then a couple months later, it'd be a difficult tenant or they'd moved out. She goes, "You know what? I have another property I'd like to sell you." And these were always no money down seller finance deals because I did what I said I was going to do by, improving the property and making payments to her on time every month. And then she became my first private money lender. It was a win for her. She got to continue to have income, and I got to go take that money and reinvest it into new deals. Everybody won in that scenario.
You know, where about, people that get into these deals, you're in the community, you got this great community you've built up, 0 to 100, and we'll talk about that as well, and I'll have a link in the show notes to that. But having met with so many people who have gotten started in creative financing, seller financing, what would you tell people that they need to look out for, where people get into trouble when they try to put these deals together?
I think the biggest thing is buying properties. Not every seller finance deal, just because a seller will carry financing, doesn't mean it's a great deal. I believe that, deals are, they're made, not found. It's rare that someone's offering terms, whether it be price, down payment, interest rate, that always financially makes sense. I mentioned, earlier in the show that I had 200 conversations. There were other sellers that wanted to carry financing, but I did the math, and the math would be backwards. They wouldn't cash flow. At the time, like, I look back and I feel very fortunate that I didn't have any money. I don't think I felt that way at the time, but early on I felt fortunate I didn't have money because it forced me to be creative. And so I had mentioned that, my only criteria in those early years were that the property had to be cash flow positive. It was because I needed cash flow. I needed the money to live, to survive. And I think that's what really, saved me and allowed me to hold on to these properties. Just because a seller was carrying financing, the terms still had to make financial sense. I would buy on terms that supported what the property was doing the day that I bought it and the previous couple of years. I would look at it. I wasn't buying properties going, this has to go up in value for it to make sense. Rents have to go up in order for it to make sense. Now, I was buying almost every property I purchased had upside potential. The rents were low, it was poorly managed, but I always put together terms that actually supported the financials of the property the day that I bought it. Because my worst case scenario, I was like, worst case scenario, the property's cash flow. And if I get to the end of that term and I can't refinance it, I'll give the property back. Now, that never happened. And I was able to maximize rents and get, improve the property and create a ton of value and refi out. But I put myself in a scenario where, worst case, the property cash flowed from day one. And that allowed me to hold the property. Some of these properties I've sold off, because they've gone up in value and I've put that money other places. Some of these properties I still hold today. But I had a lot of people early on saying, well, what if the values go down? Especially 2009, 10, 11, 12, you had people going, yeah, but what if the real estate's worth less? I remember thinking, I have nothing to lose, and they're going to cash flow the same or better. So as 2009, 10, 11, 12, 13, as I'm buying these properties, I never cared what the value was on paper as long as they were cash flow positive. And the cash flow from these properties is what allowed me to hold them long enough to then refinance them. And so I think, that was a long-winded answer to your question, but I want to make sure the financials support the property on the day that I purchase the property.
Well, the great thing about it is most of the time you're going to find these deals, they already have a tenant in the property as well.
Yes.
So it is currently cash flowing. It's just a matter of the rent's getting assigned over to you. And so then you start collecting that money. But what about the rehab side of it? How often do you find properties and you look at them and you realize it's going to need some CapEx to go into it to make it what it needs to be? How does that factor into your investment decision?
Yeah, in those early years, I mean, I was just scrappy and cowboying it, and I don't know that this is, I would say this is the best advice. I had, very little reserves. I had really no reserves, no money in the bank, but it was like I had also no plan B. I mean, I was working a 30-hour-a-week minimum wage job, so it was like I operated well not having a plan B, because it was worst case scenario. What would happen? I'd have to give the property back and go back to a low paying job. So there were a lot of crazy times in those early years where it's like, I self-manage. I today have about 450 rental units, and, up until about 17 units, I managed myself. In those early years, look, I didn't have a bunch of reserves. I didn't have a bunch of money to pour into it, but the risk of not doing the deal outweighed all the what ifs that could happen in real estate. What if a tenant moves out? What if I have to renovate this? So yeah, there were some crazy times. Like, a tenant moved out and I'm like, oh gosh, like this place needs, something. And I'd pull up the carpet and I'm like, thank God there's some hardwood under that carpet that hadn't been replaced in 25 years. Like, and some paint, so I didn't have the money at, in those early years to do all these heavy rehab projects and heavy turns. Over time, I've been able to put a lot of money into, some of these properties that previously had deferred maintenance. But for me, it was, risk and reward. It was like the risk of not doing the deal way outweighed the risk of all the moments that can happen in real estate. I'd rather own the real estate and have to find a solution to the problem than have the problem of not owning the real estate.
So in the last 2 years, have you run into this issue? Because I've run into it with our investing, is that you approach the investor, and again, I started to approach some younger investors, 50 to 60. And what I found is that many times they wanted the price that they saw on Zillow, okay, and you just couldn't make them cash flow because the interest rates that they would demand as well, it just didn't work. And a lot of that came down to the fact that interest rates have been going up, and people realized they could just stick their money in the bank and get a good return. So what I was willing to pay to make that deal work at their price point, there's no way I could do it. And so we walked away from so many deals because of that. Have you seen that? And have you seen a softening now in the market because the interest rates are starting to go back down again, so the deals are getting better? Just curious.
Yeah. I have seen a little bit of a softening, but I'm not focused on, multifamily anymore. I've really shifted. 2022, basically 2019 to 21, I was really focused on buying mobile home parks, picked up 8 mobile home parks and an RV park. But 2022 to present, I really started focusing on triple net commercial deals. And, I found banks that were actually willing to get creative. Up until that point, I always was like anti-bank. I use the bank for a refi, but get creative on the front end. And as I shifted into commercial properties, I found banks that were actually willing to get creative on good deals. But to answer your previous question, yeah, I think we're coming from, through a time where it's, interest rates were really all-time lows, right? We're coming out of 2020, 21, early 22, interest rates were low and money was cheap and it was easy to get financing and everybody was able to, buy real estate. And, I think that, there's a lot of syndicators right now that are getting their ass kicked because they were buying on slim margins with easy money. It was easy to raise capital. It was easy to give somebody money to, to do a deal. And then all of a sudden, interest rates double. And I think, 22, 23, even 24, we kind of had this period of time where sellers, just like you're saying, they looked at Zillow or they looked at what a neighbor just sold. And this is like all asset classes, like single family, multifamily, mixed use, commercial, everything. They're going, well, this is what it did sell for. Well, when interest rates were almost nothing and money was, easy to get. And now interest rates have doubled and they still want what their neighbor sold their property for. And then you have these buyers that want these crazy discounts. So I do feel like there was this period of time where, buyers wanted, like 2008 pricing. They're going, well, hey, everything's changed. Everything's changed. We want a huge discount. And you have sellers going, yeah, but my neighbor sold their property for this, it's worth this much. And so it kind of felt like in a lot of markets there was just this back and forth. I do think, now we're in early 26, and it seems like a long stretch, but I feel like buyers and sellers are getting a little more reasonable. And I also think it's a time to get creative. Like, this is a great opportunity to get creative. When banks start tightening and sellers can't get what they want for a property, it creates an opportunity for a buyer and seller that are willing to get creative to put a deal together that wouldn't typically work with, quote unquote, traditional type of financing.
Yeah, so then what would you recommend people look at? It single family, multifamily, mobile home parks, commercial, in this current environment right now? If you had to start over,
Mm-hmm.
knowing what you know now, what is the first product asset class you would look for?
Gosh, that's tough. That's tough. I mean, I've been asked that so much. I would focus on building relationships, building your network, getting around people that are, that are doing what you want to do. You know, I'm invested among multiple asset classes, and that's worked really well for me. I don't syndicate. I don't raise capital. I don't have a lot of partners on deals. So some people really focus on, hey, be an asset expert. The guys I run 0 to 100 with, they almost exclusively buy mobile home parks. So they're experts in the mobile home park space. They raise capital that serves them well. They should be experts if they're raising capital in that space. It's always tough. Like, I get asked all the time, would you, if you were to go back, would you do it how you did it and start small and then scale, or would you just start with bigger properties? I kind of hold two conflicting beliefs because, those first couple deals gave me the confidence and experience to do the next one and the next one. The first seller finance deal, the confidence and experience to do the next. My first big commercial deal gave me the confidence and experience to do the next and the next. So, I think you find what works for you. I mean, I've met people that start with single family and they slowly scale up. I met a guy once that syndicated a 300 unit apartment complex for his very first investment deal. I don't think there's a right or wrong. I think it's important, whatever you're investing in, like, get knowledgeable. I think young and new investors, it's almost like do it all until you find your niche, like kind of find what you want to niche down on. I wish I had a better answer for, your listeners, but I think everyone's investment philosophy is different, and there's a lot of ways to, build wealth and financial freedom through real estate.
Well, I think, what I would add to that is, associate with the community, get to know other people who are doing what you're doing. And they'll be a mentor to you, and they'll help you walk you through where you're trying to get to so you don't make a serious mistake. What I've seen with investors, I've been doing this now for, gosh, what has it been, 27 years? And you see those investors that are excited, they want to get out there and start investing, and then they hit a wall and they lose money, and then they never go back to it because they never took the time to invest in themselves, invest in the education, to find the people that have already done it, learn from them, or have a support group of individuals that can help walk them through it. And I think you've created something there. I'd like you to talk about a little bit about, for those people, about 0 to 100, what that can do for them if they're just thinking about getting started in this.
Yeah, I think getting involved in the community and building I mean, I say relationships. I think it's one of the biggest hacks because you can compress time frames. Like, if you have people in your network that are 1, 2, 10 steps ahead of where you want to go, you don't have to bang your head against the wall for 10 years figuring out a problem that somebody else has already solved. 0 to 100. It started with it's myself, Mitch and Travis. Mitch and Travis, we met through another mastermind, but they started 0 to 100 before I got involved, and it was really asking themselves the question of, why is it that some people spend 20 years, trying to invest and they own a duplex, while other people are building to thousands of units in a short period of time? And it started very organically that way. I got involved because we really aligned on not just financial freedom through real estate, but time freedom through real estate. We all value our time. My own journey was, I had this innate desire and to become financially free, and really questioning, why is it that I want to be financially free? It really came down, I wanted to own my time. I wanted autonomy. I wanted to spend time with my wife and my kids, and I wanted to travel. I didn't want to show up and have a boss. I didn't want people telling me what to do. And Travis and Mitch, who I run the 0 to 100 podcast with, and we have our 0 to 100 community, align very much. We, through a lot of conversations with other investors, we realized that a lot of people talk financial freedom, but one layer deep, it's not always that they're excited about real estate, but it's what real estate can do for them. Oftentimes one layer deeper, why is it that you want financial freedom? Usually the answer was like, well, I want to be able to quit my job, or I want to spend more time with my family. I want to travel. I want to give back to this cause. And so 0 to 100 started very organically, with people, the people within our tribe are men and women that not only want financial freedom, but they want to buy cash flow in real estate to give them true time freedom so they can live life on their terms.
Yeah. I mean, that's exactly right. And that's why, when you get started in real estate, even if, as you stated, your journey, you started small and you didn't make a lot of money at first, but over time you stuck with it and look where you're at today. As you stated, spending that time with your family, being able to travel to Hawaii or Europe and you're still earning money, there's no price you can put on that. It's just, to get to that point through real estate is where I think a lot of people that are watching this want to be, and they should take advantage and go to your site, check it out. As I stated in the show notes, I have a link there. Go there, get involved, all right? Don't just stand there and watch another one of my videos and think, all right, this is magically gonna happen. It's 2026, I've got my one property, I don't even have anything yet, but if I just watch more, it's gonna be there. You need someone kicking you in the butt and forcing you out there. So anything else in passing you wanna leave or say to the audience?
Yeah, I think the last thing I would say, like, if you want it bad enough, you find a way. I mean, I've been fortunate to be around a lot of successful folks, and it's, if you want it bad enough, like, I think it starts with that desire, and then you go and take action. You go and you make it happen. You get around the right people. You make offers. You build relationships. You take down deals. A lot of people talk about wanting it, but I think it does start with that desire, that strong why. But where I see people become real successful is they have that strong why, that strong desire, and they actually go take action on their goals and they make their dreams a reality.
Yeah, well said. Hey man, thanks for coming on and taking the time. I know we went way over on this, but the topic just flowed so well. I know it's going to get a lot of eyeballs. I appreciate it, and I wish you the best.
Thanks, Clint. Appreciate you having me on.